Hey, you! Yeah, you! Welcome to another episode in my series Graphite Stocks, where I hope to one day have analyzed every single graphite stock on the stock market. That is of course because I am long-term bullish on electric vehicles. Every single EV uses a battery, moreover all the batteries we know of today use graphite. Hence why we're looking at graphite stocks, to try to determine which ones are the best for a long-term investment. Today's topic is a junior mining company, soon to be operational. Today we are looking at NextSource Materials trading under these ticker symbols. Let's quickly get into it with first a company overview. We are going to keep this company overview relatively short and simple. So company-wise, we are looking at a mine development company with their headquarters in Canada, but their main graphite property is located in Madagascar, next to the continent of Africa, specifically located right here on this map. Now, this property does have quite an impressive graphite resource with about 140 million tons of graphite found at about a 6% purity. By the way, that means that this company in total has access to 8.4 million tons of 100% pure contained graphite, which is quite a lot. I would say that this graphite resource could be considered a very large resource, especially compared to some of the other companies we've covered on this graphite stock series. NextSource Materials is commissioning their phase 1 plant as we speak, and the company does plan to have a functioning mine in the first half of 2023. That is the phase 1 mine with a 17,000 ton per annum output of graphite. The plant is real, it looks really impressive, and again it should be operational during the first half of 2023. But delays are to be expected, we are talking about mining after all. But the real driver of returns for an investor in NextSource Materials will be phase 2 of the Molo graphite mine. This is where the company hopes to slap on an additional 150,000 ton per annum capacity. For this we are expecting the feasibility study to be completed in Q2 2023, so that is when we'll know the economics of this facility. Now the company is also battering on a BAF or battery anode facility located in Mauritius, and this one should be operational somewhere during 2024. This battery anode facility should first be operational with a 3,600 ton per annum capacity and then expand to 14,400 tons per annum capacity. So plans wise summarized: Molo mine 17,000 ton per annum in Q2 2023. Then expand to 167,000 ton per annum of graphite concentrate somewhere down the line, probably 2024 or 2025. Regarding the battery anode facility, limited operations in 2024, then later expand to a significant 14,400 ton per annum production, maybe 2025 to 2026. Time will tell. Now the last thing I want to highlight before we start talking about the valuation, the company does actually have offtake agreements in place for more than 100% of the phase 1 capacity. This tells us investors that downstream partners actually trust the capabilities and the product of NextSource Materials. A better vote of confidence than a downstream partner saying, yeah, sure, I'll buy that stuff in the future, doesn't really exist in my opinion. Okay, so consider yourself catched up to the grand plans of NextSource Materials. Now I really want to talk about the valuation. You see, the success of an investment you make largely depends on the quality of a business you buy. The better a business, the better your returns as an investor will be. But the returns of an investment also largely depend on the price that you pay for that specific company. The lower the valuation when you buy, the larger your potential returns will be. Now, I have no doubt in my mind that NextSource Materials is a phenomenal business. Okay, I mean that as far as startups really can go. But is the valuation good enough for a long-term investment or a long-term gamble? Well, for that we need to look at the current price of the company. And for that we need this number, the fully diluted common shares outstanding. That number times the current share price results in a market capitalization of about 300 million Canadian dollars on a fully diluted basis. That means that if you were to buy a part of NextSource Materials today, it would be for that price. Keep that number in mind. Now, $300 million in and on itself doesn't really tell us anything. So we have to compare that number to the future potential of NextSource Materials. By the way, that valuation equates to roughly 220 million freedom bucks, which is the figure we'll be using going forward. Anyways, by 2026, the company should be producing 167,000 tons of flake graphite concentrate and 14,400 tons of anode material. Flake graphite can trade for varying prices, depending on how pure the stuff is and how large the individual flakes are. But let's be pretty bullish and slap on a price of about $1,500 per ton on this graphite stuff from NextSource. Regarding anode material, anything between $7,000 to $15,000 per ton is totally doable. So again, let's be quite bullish and slap on a price target of $10,000 per ton for the anode material of NextSource Materials. Now, those production figures and those prices result in a total revenue in 2026 of almost 400 million US dollars. So we can expect almost $400 million in revenue if and when this company is finally able to get those revenue streams, probably somewhere around 2026. And that is the problem, really. Mining companies aren't really known for their extremely high net income margins. Some mining companies are able to achieve double-digit net income margins, and even fewer will be able to achieve 25% net income margins or higher. But even at a 20% net income margin, this company would only rake in $80 million a year in profits. That isn't a lot by 2026, while the current valuation of the company is already 220 million US dollars. Upside-wise, there doesn't seem to be a massive amount left. Maybe based on that $80 million in net income, the company could achieve a market cap of $600 to $800 million by 2026. Maybe, but even then, you as an investor will not be getting a 3x to 4x return. Probably not even close. I say that because of how the balance sheet was during September 2022. Back then the company only had access to $4.6 million in cash. That money will never be enough for the grand plans in Madagascar, and it will certainly not be even close to the amount they need for their grand plans in Mauritius. That is to say, I believe an investor in NextSource Materials today is taking up quite a bit of risk. Risk in the form that the management does need to deliver. Risk in the form that the company does need to become profitable at some point in the future. Risk in the form that the company does need to acquire significantly more capital than they have access to today. And most likely an investor will be diluted into smithereens. And for that risk, you aren't even getting that much return. Maybe a 2x to 3x in a 4-year period. That certainly ain't bad. It's really good actually. But it certainly ain't the mind-boggling returns that some of these other junior graphite mining companies are showing us today. So that is my opinion on NextSource Material. A phenomenal business, but a stock price which I just cannot really get behind. But that is a stock price for now. Hopefully it changes in the future. Time will tell. Now, before we sign off, real quickly, make sure to comment your favorite graphite stocks down below in the comment section. I would love to cover your favorite graphite stock in the next episode. Now, time for a classic YouTuber disclaimer. While I am a registered financial advisor in the Netherlands, I do not have the legal capacity yet to give anyone investment advice. Therefore, this video and any other video on this YouTube channel can never be taken as financial advice. I cannot be held liable for the losses you make while trading according to my opinions. Please do your own due diligence. And with that said, thank you so much for watching. I love you all. Peace.